Video hook. The Fed just threw Wall Street a curveball and Meta's blockbuster earnings could save the NASDAQ from its worst intraday swing in 3 weeks. Here's what every investor needs to know before tomorrow's open. Markets are pricing in a pivot that may never come, and the divergence between megacap tech and everything else is getting dangerously wide. Meta Platforms. Mark Zuckerberg delivered a beat and raise quarter that reminded skeptics why the investment cycle still has legs. Revenue came in at $42.3 versus $41.4 expected, driven by a 16% surge in ad pricing as Llama-powered targeting tools drove measurable ROI improvements for advertisers. Operating margins expanded to 41.2%, up from 38.9% a year ago. Zuckerberg on the call. The monetization of our infrastructure is no longer theoretical. Shares rose 4.2% after hours before giving back half the gain on macro concerns. Microsoft MSFT. Satya Nadella's Azure continues to be the engine the bulls needed. Cloud revenue grew 33% year over year to $29.1 ahead of the $28.3 consensus. Copilot seat additions hit a new quarterly record. MSFT guided Q4 revenue to $73.5 $74.5 above the $72.8 street estimate. The one asterisk commercial bookings came in light at $28.4 versus $31.2 expected, suggesting some enterprise deal slippage. Snap Inc. CEO Evan Spiegel had the worst earnings call of his career. Revenue of $136 missed the $141 estimate, and Q2 guidance of $132 $137 was well below the $148 consensus. Daily active users grew just 8% versus 11% expected. Snap's direct response ad business continues to lose share to TikTok and Instagram Reels. The stock cratered 18.6% after hours. Spiegel went silent for nearly 90 seconds when asked about the company's monetization roadmap. That pause cost shareholders $4.2 in market cap. Pfizer CFO Dave Denton guided full-year EPS to $2.0525, cutting the midpoint by $0.15 versus prior guidance. COVID antiviral Paxlovid revenue fell 67% year over year to $491 The pipeline remains a question mark with 2 late-stage oncology trials delayed until H1 2027. Shares fell 5.1%. The S&P 500 closed down 0.4% at 5,612 after oscillating between gains and losses throughout the session. The NASDAQ composite fell 0.8%, weighed down by semiconductor weakness and Snap's contagion effect on digital advertising. Names Trade Desk TTD dropped 6.2%. Pinterest pins fell 4.8%. The divergence story of 2026 continues. The equal weight S&P 500 outperformed the cap-weighted index for the 8th straight session, a streak not seen since October 2022. This tells you the megacap high premium is compressing even as underlying earnings remain solid. Sector breakdown: technology -1.1%, communication services -2.3%, Snapdragon, healthcare -0.9%, Pfizer drag, energy +1.4%, WTI crude at $71.80, up 2.1% on OPEC plus supply discipline. Financials +0.6%, yield curve steepening benefiting regional banks. The Fed's preferred inflation gauge Core PCE came in at 2.6% year over year for March, 1 tick above the 2.5% estimate. This was the number that ruined the morning rally. Month over month, Core PCE rose 0.32%, above the 0.26% whisper. Services inflation, particularly in shelter and healthcare, remains sticky. Fed funds futures now price just 1.48 cuts for the remainder of 2026, down from 1.9 cuts priced 1 week ago. The 2-year Treasury yield rose 8 basis points to 4.21%. 0.4%, while the 10-year climbed 5 bps to 4.44%. The curve is steepening. The 2s10's spread at plus 23 bps is the widest since January. Chair Powell speaks at the Hoover Institution tomorrow. Markets are listening for any hint of the June cut. The base case on Wall Street has shifted. Goldman Sachs chief economist Jan Hatzius moved his first cut call from June to September. Morgan Stanley held at July. The Hawks are winning the argument for now. Dollar index DXY 104.2. Up 0.3%. Gold $3284/Oz down 0.8%. The classic good macro trade-off where strong dollar pressures the metal. Bitcoin $96,400 flat. The crypto market is digesting the ETF inflow slowdown but holding key support. 1. NVIDIA reports May 28, but the infrastructure spending data from Meta and Microsoft's Azure numbers confirm the hyperscaler capex cycle is intact. Blackwell chip lead times remain 12-14 weeks by Thesis. $135 price target on 28x forward earnings. Watch the $118 support level. 2. Amazon AMZN reports tonight after close. Oz is the swing factor. If Azure grew 33%, consensus expects Oz at 19%. Any upside print could add 150B market cap instantly. The advertising segment now $56B run rate is the dark horse. Chio and Jassie's logistics automation investments should show margin leverage in Q1. 3. Lilly GLP-1 demand remains structurally intact despite political noise around drug pricing. Zebound Scripts hit a new weekly record 2 weeks ago per IQVIA data. The obesity drug TEM is $150B by 2030 per Morgan Stanley. Any pullback below $740 is a buying opportunity for long-term investors. 4. Palantir PLTR. The government I play that nobody on Wall Street wants to own but retail keeps buying. Q1 revenue expected at $868M, up 36% YoY. The commercial segment's net dollar retention above 120% is the key metric. Alex Karp's unpredictable communication style is the risk, not the business. 5. Snap. Contrarian watch. After today's 18.6% drop, Snap trades at 21x revenue, a 5-year low. The risk/reward for a tactical bounce is interesting if management delivers any credible monetization update at next week's partner summit. Not a long-term hold, but a trade. The most uncomfortable moment on Wall Street today wasn't the PCE print or the Snap disaster, it was what happened on X, formerly Twitter, at 2:14 p.m. Eastern. A widely followed macro account posted what appeared to be a leaked Fed memo suggesting Chair Powell had privately told Treasury Secretary Scott Bessent that the committee was open to disk.